Welcome. This is the Free Market Roadshow, probably the largest annual series of public conferences on economics. Remarkable experts are discussing the challenges and providing libertarian solutions to today's problems. Organized by the Austrian Economic Center in cooperation with select institutes, universities and think tanks, the Free Market Roadshow tours all over Europe. Today we pay a visit to Rome.
Hello everybody, I am Giacomo Bandini and I serve as Director General at Competere, a pro-free market think tank based in Italy and Brussels. Here at Competere we want to understand the present in order to imagine and design a smarter future by developing policies and business models that foster innovation. By enhancing the public debate on what will be relevant issues, we aim to promote prosperity, increasing freedoms, and improving the coexistence of citizens. We rely on science and the experimental method to produce facts and pursue evidence that support smart and sustainable solutions for a broader open society. Competere is a place where citizens come to think, brainstorm, discuss, research, and also advocate for a smarter and freer world. Our doors are open to every individual and groups that wants to bring fresh ideas and visions. As an independent pro-free market think tank, we are so happy to be part of the Free Market Roadshow network and family, and to encourage discussion on the spirit of freedom and innovation that leads to progress and prosperity. If you would like to learn more about our activities, please reach out to us and visit our website, competere.eu. I hope to see you all soon.
Thank you so much, everybody, and good evening. Good evening for being here at this new episode of the Free Market Roadshow. And as Barbara said, we are here in Rome. As Giacomo said, we are here at the Competere.eu in our headquarters, and you can see it from the beautiful Renaissance background. And today we are going to talk about something, I would say, very serious, as most of our topics are obviously very serious. Some regulations that, of course, are dealing with them, and the fact the point that we're going to discuss is regulation in the banking system, and we are going to do it with excellent speakers. First of all, we have a keynote by Kerr, and then we have two Italians that are going to come video and providing their own perspective, and we're talking particularly about Professor Valerio Lemma and Dr. Luca Bellardini. But let me start right away with Kerr, and you can see obviously the bios of our three speakers on the Competere.eu website or on the Free Market Roadshow website. And again, you know that I want to apologize because we cannot see each other live, we cannot network, we cannot have a drink together, we cannot discuss one in front of the other. But thanks to technology, at least we can enhance the debate. As Barbara said in her introduction, what we're doing is very important. It doesn't matter if you're following us right now live, but you can rewatch this video again and again, or you can watch it for the first time in the future, being whenever you want from your comfort of your couch. But thanks for joining us. Let me start with our keynote speech here, and I ask please our great Austrian Economic Center team to send the video.
Good afternoon and welcome to the attendees at this year's online Free Market Roadshow. Welcome to sunny Barnet in North London. My theme today is the subject of the unintended consequences of regulations to the extent that they have changed substantially since 1989. Obviously a historic year regarded as the end of the Cold War, and funnily enough the link here with where we're sitting in these beautiful vegetable gardens called in English parlance allotments, is that of course allotments in England are associated with the First World War, when British citizens were encouraged to dig for victory. Barnett is also rather famous and is having an anniversary fairly shortly for playing a major role in the Wars of the Roses in 1471. 14th of April, the Battle of Barnet took place 550 years ago, changed the line of the throne. Henry VI, whose main achievement is the founding of Eton College that gave us great political leaders such as David Cameron and Boris Johnson, was basically captured here and killed a few days later, and his proxy, Earl of Warwick, died in battle, and Edward IV and the Yorkers took over. Back to the specific subject of 1989 and the rules since then, I intend to focus today on my specialist subject, really banking and the monetary consequences of the regulatory changes, particularly as they affect banking. I'm old enough to have been working in banking in 1989, and in the 17, 18 short years between then and the great financial collapse 2007-8, I and my colleagues noticed some extraordinary rule changes to leasing laws, the allowance of triple dipping, multiple gaming of tax pools in different countries, the emergence in particular of derivative rules, accounting rules, regulatory capital rules, in particular the emergence of the rules on credit derivatives, which of course enabled exposures to be matched off against each other as if they were kind of backing insurance companies with no correlation. But as the AIG experience shows at the peak of the crisis, the correlation risk of AIG's collapse and any problem in the credit default swap market for subprime mortgages was a full one-to-one, and obviously there should never have been any netting of exposures. Specifically, there are perhaps three limbs to the regulation story since 1989, which I'd like to focus on. Firstly, the sheer volume of regulations is so great, so vast. I have estimated previously it would take the average man a couple of 100 years to read and understand all the regulations in banking. I don't think I need to do that myself, because I'm so experienced in banking. I can kind of tell what the regulation will be, even if I'm not particularly specifically aware of each individual one. The result is that regulators can kind of pick and choose. Specific national general laws about, say, fraud and false accounting have been replaced in terms of the practical implementation of laws by these regulations, and we rely on the regulators themselves to do this. And secondly, that might be all well and good if the regulators were independent, competent, and acting on behalf of taxpayers. But as many examples, and recently this weekend, this Archegos example of a failed family office with some ramifications in American and Chinese stock markets is an indicator that perhaps regulators aren't quite as on top of their game in this regard as they'd like to be. And thirdly, I'd like to talk about the process of the promulgation of rules and regulations, with specific reference to what the author and Blavatnik school professor Karthik Ramana has called thin political markets. I think this point is worth spelling out for a moment or two. Ramana's definition of a thin political market is one where the general public are effectively dissuaded from playing any role in the emergence of the rule or regulation. Accounting is a prime example. When any accounting rule change is considered, and he's heavily versed in the emergence of the American FASB accounting standards for goodwill, how they changed in the early 2000s. In these debates and consultations as to what the new rule should look like, there tends to be three features of a thin political market. Firstly, the people playing the role are professional corporate managers and their accountants and supporters. These people clearly possess the necessary technical expertise to opine on the validity of the rule. Secondly, however, all of these experts are in truth heavily financially conflicted. They are insiders. They have a major incentive for a certain outcome to the proposition and foundation of the rule. Thirdly, as previously mentioned, the general public is not an expert and is discouraged from playing any role in the consultation whatsoever. So we can distinguish the thin political market of accounting rule promulgation, of the emergence of new bank Basel regulatory capital standards, and certain national interpretations and derivations in the EU from ECB rules. We can distinguish all that from the process of making new rules for parking in the car park of Barnet General Hospital, which is a few hundred metres behind me as we now sit here. There's been plenty of debate under the pandemic regulations of the importance of making it easier for family to visit their loved ones in hospitals outside of pandemics, and the fairly high levels of car parking charges. Everybody in the UK considers qualified to have an opinion on the level of hospital car parking charges, but very few would show any interest whatsoever in the development of accounting rules for banks. Where does this go? What are the consequences, what are the unintended consequences of these regulations? Well, I really think we have to look back to the great financial crisis of 2007. At the time the banks fell over, we had one or two different narratives. Firstly, most of the world today believes that this was all caused by excessive unreported exposures being taken in one specific fairly small market, subprime mortgages. Secondly, the Bank of England story under the then Governor Mervyn King was that it was only a temporary liquidity crisis, which of course was an important narrative, albeit I think a false narrative, because that in turn was used to justify bailouts and the provision then and since then of incessant central bank liquidity, effectively recourse to the magic money tree. I don't think the evidence, despite the wonderful PR put out by Bank of England and their European counterparts, I don't think the evidence justifies the PR that the banks have been recapitalised. And when you look at the market values of bank share prices, especially in the wake of the substantial falls suffered by Credit Suisse and Nomura over the weekend in the light of this Archie POS collapse, I don't think the evidence really supports the narrative being put about today. In other words, the continued failure of the interbank market, which all my career prior to 2007 was always available for any bank that had a short-term liquidity shortfall. They would go into the interbank market and banks would lend to each other without collateral, without pledges, without security and so forth. That failed in 2007-8 and has never come back, and I don't think actually ever will do. The consequence of that, of course, has been zero interest rates, and despite a little upward wobble in the long-term yield curve a couple of weeks ago, I think there will be event after event from now on, supposedly a surprise, but of course a continuation of really this theme of banks being on life support and central banks moving from being originally lenders of last resort to kind of bailers outers of first resort, then to providers of almost infinite liquidity, and now of course to the purchasers of large swathes of bank assets. It's universally accepted that the result of this has been that, particularly in Europe, that member states have had most of their funding in 2020. I think the figure was 80% of member state new funding and rollover funding entirely purchased by their own central banking systems. This is a situation which, leaving the pandemic aside, is inconsistent with the enthusiasm voiced even here in London recently by the chief economist of the Bank of England, Andy Haldane, who foresees the UK economy powering away from the pandemic, enjoying its newfound freedoms under Brexit and so forth. I think these hopes are sadly wildly optimistic. I think there's going to be a problem in the money system itself, and it's quite likely that at some point the speed at which money's being created, minted, printed, handed over to central banks, and not really reaching the general economy, which is why inflation hasn't taken off as rapidly as it might. I think there's going to be a situation where we're in some kind of crisis of confidence in our system of money itself may take place. That ought to be the opportunity for things to turn around. But prior to that, I would urge you to just please keep your wits about you. The latest UK budget from our supposedly wonderful young and innovative Chancellor has introduced an even more concerning trend, namely that of a mortgage guarantee scheme So from now on in the UK, if you're a first-time buyer of any property, you'll be able to buy that with a mortgage 95% from any UK bank, provided you put down a 5% deposit. But that 95% loan from the bank is going to be fully guaranteed by taxpayers under this government mortgage guarantee scheme. So this will mark a new kind of Rubicon being crossed by the support given to banks. The banks in the booming market for lending to first-time buyers will be taking absolutely no risk whatsoever on the lending decisions that they take. You needn't be an expert in moral hazard and the principles of banking to understand that this is hardly giving much confidence to concerned citizens such as myself, who are hoping for banks to kind of tighten up their standards and show more responsibility for credit decisions that they take. On that slightly concerning note, you'll forgive me if I bring the talk to a close. There are many other aspects to unintended consequences of regulation in other walks of life. We could talk about the pandemic and how this has led to children's mental health problems. We can talk about schools and so forth, but in the specific world of banking, I remain quite concerned that we're on a trend now which, when it gets to this level, 80% central bank funding of member state government debt, and probably here in the UK it's a little better, I think this trend is kind of irreversible. And obviously having an entirely circular system of central banks effectively printing the money to lend to governments is not going to lead to the assertion of any free market principles. It's therefore difficult to disagree with the principles expounded in the introductory notes on this year's Free Market Roadshow. Sadly, we have missed a few opportunities to power away from 1989 and impress free market principles on the countries of Eastern Europe. Thank you for your time.
And we are back in Rome, and I have to apologize if my network is not working very well, so my connectivity goes up and down today. We should talk about telecom regulation probably. So I will, talk the least as possible so that you don't realize that my connection is not there. Very interesting discussion here. I was very somehow sharing the frustration that people are more interested in their parking charge rather than in a discussion around the banks and the banks regulation. Although, we go to the bank, we were used to go to the bank every day, but at least we use banks apps, and we very much concerned about how banks. Back here with Professor Lemma and Luca Bellardini, and I want to go, since I see that my connection is not working and I have to apologize, let me go to Professor Lemma. Professor Lemma has an incredible background because he has 2 degrees in law and economics, and is a full professor in laws and economics at University Guillermo Marconi and Louis University. Sharing some of the pessimism of this keynote speech, Professor Lemma, or Valerio, as you want me to call you, do you share this pessimism, first of all? And second, what has been the role of central banks? If we talk about experience of central banks, what's their role? What has been the role of central banks in the past years? And how do you foresee their role in the coming future? I know it's a big question, but I'm also sure that you can answer this in few minutes.
What a question. Thank you very much. Thank you for your invitation, and I'm glad to hear and to comment such a pessimistic speech, even if I'm a quite optimist. So from my perspective, instead of worrying about what we cannot control as crisis, we should shift our energies to understand what we can create. Indeed, from my perspective, we are facing a series of waves of global crisis since the beginning of this second millennium. Our world is burning, and not only to COVID. We are facing continuous global crisis. Do you remember the new economy crisis of 2001, as well as the real estate crisis in the United States of 2004, and then the very famous subprime mortgage crisis of 2007, the sovereign debt crisis, and so on. And this lasts until the pandemic, or rather, the social measure to contain the effects of COVID, SARS-19 are acting this time. Indeed, we are facing a new phenomenon that is unprecedented in terms of magnitude, frequency, global reach, the extent of the ecological degradation and the social deterioration. This is a very tough crisis. Certainly, the stakes bound up in ranging the conflicts of our day, and all of this is too high for the usual academic compliance. I believe that our most urgent task is to consider our efforts as a part of organic or politically engaged actors that has to address with the crisis and with the challenges arises from the crisis. So, at least we will all agree that our global capitalism is highly unstable and a crisis-ridden system. In this respect, we are facing disastrous outcomes due also to external factors, not to financial factors at all. But we have to understand the nature of this global capitalism in order to understand the nature of the crisis and to set all the intervention, both from a monetary and a supervisory perspective. So, coming to your question, I think that we should be optimistic because we have to focus on our resources and our capabilities to find solution to this crisis. So I aspire that as a scholar we will be able to analyze and there is the perspective of a new global capitalism, and I am very happy that this wide-ranging debate continues on the nature of our contemporary crisis. As you may understand, I've been centrally concerned with this matter since the beginning of my studies, seeking at the first time the tools to face the crisis, and now to construct a theoretical framework for situating them and understand how the innovation would impact. So, concluding this first part of my intervention, I would like to highlight that the global capitalism perspective offers a powerful experimental framework for making sense of crisis. Indeed, I think that a corollary of the pandemic crisis is the inevitable increase in public debt and the need for an active support of the European Central Bank in Europe, based on the emergency purchase program of government bonds and private bonds. Indeed, there is a broad agreement on the general thrust of fiscal and monetary policies, but I think that we will come back on this later. So, let's say we have huge waves of crisis, but we have the capability to surf such waves.
Thank you, Professor Lemma. I want to turn right away and avoid my connectivity problems to Dr. Luca Bellardini. Luca, as a PhD in management at the University here in Rome, Tor Vergata, in finance, and he's working also with Bocconi University, particularly on at the Green Department on the circular economy. So, Luca, what has been the role of central banks in the past years, and how do you foresee this role projected in the future?
Well, thank you, Pietro. Thank you, Giacomo, and all the staff of Competere. I'm really glad to be here with you and to give a small contribution to such a wonderful debate. Also, thank you, Professor Lemma, for your being here tonight. So, thank you. Yes, of course, I appreciated a lot the general pattern of Professor Kerr's keynote speech, in particular because he highlights what is an unavoidable truth, something that cannot be denied anymore. The fact that a legislative but also a regulatory flooding has also has conquered all the legislations across the world after the global financial crisis started in 2007-2009, but also on the wake of the current crisis, on the pandemic crisis. Central banks' interventions in terms of loose monetary policies are under the watch of the world. So we can all realize how deeply central banks are intervening into the economies, injecting, of course, liquidity, but with results that are maybe sometimes at odds with what one should expect. Professor Kerr highlighted the problem of public choice as it was presented by a very relevant literature in economics. One of the clearest example of a public choice problem relative to economic policy is the fact that citizens who are bound to save their money in order to complement their wages, to have a little wealth set aside for a rainy day, as a sort of rainy day funds, they are suffering from interest rates going really low, going deeply down because of central banks' interventions, because of loose monetary policies. So we are really stuck with a situation which is incredibly different from the one that the world witnessed in 1929, when the Black Tuesday hit. There was a really minor role for central banks. Nonetheless, there are authors who also at that time blamed the Federal Reserve for creating the conditions for the crisis. But nowadays, the degree at which central banks, but also at which regulatory agencies and regulatory bodies in general are acting into the economic system is much bigger than what used to be 90 years ago. So we often listen about the faults of the market, about market failures, and we also heard about that voices with respect to the global financial crisis of 2007. But we actually should also talk and speak about a regulatory failure, because central banks, but not only central banks, a vast array of legislators and regulators worldwide haven't been so able, practically speaking, in dealing with the situation. There is also someone who questions even the fact that the COVID crisis may be seen as a black swan. It isn't actually a black swan. Many authoritative voices had already warned us about the possibility that a pandemic could have hit economic systems worldwide. Also, as Lemma suggested, also the measures taken by governments in order to counteract the pandemic have contributed to exacerbate the effects of a deep recession, a deep economic contraction. So it isn't something like a black swan who came completely unprecedented, completely in a way that couldn't have been foreseen in advance. This was something that could have been dealt in advance with, but central banks were stuck in a situation in which the last 10, 12 years have elapsed in a continuous series of loose interventions into in terms of monetary policy, into from quantitative easings to asset purchases programs. All of these had contributed to a situation which was instated well before the COVID crisis. So the role of central banks, but regulators in general, to answer your question, has not moved so much away from what has been until a few years ago, until before the COVID crisis. We should have done something different before. This situation now is a constraint, a boundary which prevents economic policy, both fiscal and monetary, from changing as it should have done in order to mitigate the effects of the crisis.
Thank you, Luca. Before going back to Professor Lemma, I was very intrigued with what you said in a very articulated way, and it was really much a pleasure to listen to the both of you here. Also, you've been analyzing very complicated and, as Professor Kerr said earlier, very, in a way, frustrating topics because, as we said, people are not so much interested in them. So it's like we're talking to ourselves or to the wall. But I know these are relevant topics that at the end, they run in the economy in our life. Luca, if we have to think about the role of central banks, particularly after the COVID or what has happened with the COVID, how do you foresee this role? How do you imagine their role? Because they're getting more and more power. So in the free market arena, one of the concerns is too much power to central banks. Is this a fear that we should share? And how do you see their role develop?
It's a question to me. I'm going.
Yes, I will start with you, and then I will go back to Professor.
Sure. Well, it's a fear that is quite understandable. It's rooted in reality, in my opinion, from what I see, because of course central banks probably since something that happened mostly exactly 50 years ago, from the end of the gold standard, the gold exchange standard, actually. Set out in Bretton Woods by means of the President Nixon's declaration in August 71. From that point on, over the last 50 years, central banks have basically become as powerful as fiat money in the monetary and financial system, generally speaking, in a broader sense. So I'm not surprised about the role of central banks becoming even more pivotal in the economic governance worldwide. Probably there is also, especially in certain countries that we know quite well, a problem in the reliability of politics that has not been able to play a role which should have been played, but technicians and the technicalities have become increasingly more central, probably because they were really in charge of sensitive matters with a good degree of knowledge, a deep degree of knowledge. Instead, conversely, politicians or other kinds of people who are entitled and trusted with administering power, they have not been able to counteract, to establish actually a vision in the world. There are a few exceptions to this, but they are not in power or in charge anymore. Who remember the name of, for instance, the Bank of England governor at the times of Margaret Thatcher? Probably no one, because not only the Bank of England at the time was not independent of the Treasury. That's right, of course. Independence was given to the Bank of England during the Blair cabinet, but probably either Margaret Thatcher herself and Geoffrey Howe and Nigel Lawson and Treasury Minister were so able to intervene in everyday economic matters, that no one should be fearful about what could have been said or done by the monetary policy authorities. So that's something that today is not the case anymore. Reality has deeply changed since then, and it's really different nowadays.
Thank you so much, Luca, for the beautiful insight. Professor Lemma or Valerio, do you agree with this view? The fact that central banks are becoming more pivotal, and then Luca said something that comes in more in my area of interest, that is the lack of political capabilities, or the fact that central banks sort of took over where politics or politicians couldn't get, and so it's a weakness of politics. And so when in the free market world there is a discussion, we should also wonder who has been ruling for the past years, and probably the central bank's role has been expanding because politics has been retracting. Do you share this view? We lost you. The microphone, Professor.
From my perspective, there is a broad agreement on the general thrust of fiscal and monetary policies, but significant difference exists on the appropriate implementation and efficiency of policy impulses. Notably, we know that there is a huge difference between the Middle European and the Mediterranean approach. In this respect, we have two different ways of doing central banking, as well as two huge differences in the accountability. We have to consider that we have not the translation of accountability into Italian, and this means that our legal order is driven by other principles. In this respect, we have to start by reconsidering the dogma of balanced budgets as a general principle. And this would lead us to a different conception of central banking, of lender of the last resort, of savers of the economics. A different approach would be based on the taxonomy of the reproductive debt, let's say, productive and unproductive debt. Indeed, if we consider that the financing of government bonds, the financing of capital expenditure, and their own returns, we should try to understand which is the balance from a regulatory perspective between such measure and the costs of borrowing, of inflation, and definitely of the debt. More broadly, by reasoning of such themes, we have to consider the huge warranted public investments. And as you may know, it is argued that good infrastructure capital accumulation represents a solution not only to the economic consequences because it's able to absorb the negative shocks, but also it's an issue in order to understand where the savings are and how to protect them. This leads me to the consideration of the bank's asset during the COVID disease. Indeed, we expect that this, let's say, social distanciated economy would open a reflection on the accounting effects of COVID-19 and the anti-contagion measures suggested. Indeed, nowadays it has become clear that the regulatory intervention of the recent months, the last year, interact directly with the activities and the assets of credit institutions, which are the, let's say, longa mano, the arm of the central banking in these years, because I think that under the liabilities of the banks, there is a huge amount of monetary resource rather than private savings. So, indeed, we have the expectation that there is a huge interaction between activities of the banks, assets of the credit institutions, and effects of central banking. And this interaction will have a deep impact on the balance sheet as well as to the real economy in the last instance. Finally, I would like to envisage that an evolution of the function assigned to reporting and accounting would allow banks to capture and compute additional elements rather than the one used until today. And we expect that this would lead to a global reconsideration of the impact of the crisis, because we are not dealing with 2 unlucky years, but we are dealing with the effect of the absence of enough distance between one business and another. So I think that in order to make the central banking more effective, we have to deal with the sustainability, and not a sustainability that is just a greenwashing under ESG principle, but it's a global consideration of all the externalities of central banking and banking business. I think that this may sound as revolutionary under the current mainstream, but I think that as a regulators and as a regulatory scholars, we have to ask for a deeper analysis of all the externalities along all the years forthcoming, because I think that the regulator should now promote a central banking and a supervisory intervention for a new normality.
Professor Lemma, thank you very much. I know you have to leave, and in a way we're getting close to our ending here. As we know, we like here, particularly at Competere, there's smart brevity concept. So being very concise and giving good input. What you said is certainly a radical change, and of course this comes also after the non-performing loans. Is that one of the reasons why you're saying we need a radical change?
This is one of the reasons, because I think that non-performing means that the debtor is not performing as envisaged at the moment where he took the loan. So non-performing doesn't mean that it's unvalued credit. It's just a loan that has an unexpected performance. So we have to look to a new way of banking and central banking, probably outside of banks and outside of monetary backstops, maybe in some alternative investment fund, which deal with private investors and not with savers. But this is a huge another story that I would be happy and glad to share with you in our next meeting.
Yes, that's for sure. Thank you so much for your participation. We let you go to your commitment, and thank you very much, Professor Lemma, for being here with us. Your video, your interview, your speech, your talk will be online forever. So help us sharing this, and thank you so much. And I know that the people in the background will allow you now to leave and leave from the screen as well. And I would like to conclude. Thank you so much, Professor. And
thank you from my side as well.
Yes. And let me conclude with you, Luca, since we can stay here a couple of minutes more, but not more, because as we said, we're getting to the end. We talked very much about a radical change. That's what Professor Lemma was saying. Do you agree with this view of the radical change? And second of all, do we have, and again, I'm bringing in my political perspective here, do we have the necessary condition for this radical change? Do you think that the COVID-19 or the post-COVID-19 will allow for this radical change? Is politics, and you few minutes ago you just said there is a weak politics and policymakers. Will they be able, and they will be finding the strength and also the creativity for this radical change?
Well, the instance of non-performing loans is really a clear exemplification of what I said before, because we have witnessed a regulatory approach which, first of all, woke up as sudden in a certain sense. So at a certain point in time, following the global financial crisis, the NPL ratios of banks had soared to, especially in Mediterranean countries, to levels that could have been ignored no more. So a sort of systematic approach to the issue had already been lacking and was even exacerbated when the macroeconomic condition had deteriorated so much that banks, even healthy banks, had started being borne by such distressed assets. But also the regulatory approach over these the last years, since basically 2017, has not been so consistent, in my opinion. Many regulators, particularly at European level, had laid out a road to deal with non-performing loans, but for the moment being, also before the COVID crisis, because of course COVID crisis gives again strength to the issue of non-performing loans, but even pre-COVID. For instance, what Professor Lemma was just saying had not been achieved yet. For instance, allowing private investors to deal with distressed assets, to participate also in a lit market, not an opaque one as it had been before. So allowing investors to create non-toxic packages of distressed assets. This is something that, for the moment being, is mainly attributed to governmental agencies or government-controlled agencies. So this is something that probably maybe is part of the problem, not a solution to the problem. So even the very solution laid out by regulators at European level has not been fulfilled in practice as it should have been, and the COVID crisis, of course, is another brick in the wall, in a sense, another element that adds on the problem constituted by non-performing loans. In a more general sense, a radical change is, of course, what should be pursued as a response to radical uncertainty, to quote Mervyn King and John Kay in a very recent book of theirs. It's something that I completely agree with Professor Lemma's idea that dealing with sustainability-related issues, it shouldn't be something even formal in what actually becomes greenwashing, as he highlighted, but should become the real practice of regulatory approaches worldwide, and it's something that is really marching very slow from all over the world, even either in Europe or the USA. Steps forward have been taken, yes, but not probably at the right pace. And if, of course, there is an open window in the coming years to rethink also even the treatment of banks' investments from a regulatory standpoint under the Basel framework, it's something that should be done. Not only temporarily suspend the application of capital requirements for banks, or mitigating them in order to allow them to to cope with distressed assets or the situation, the current situation in which governmental support to companies, to corporations is basically ending after a huge injection of capital into also the creation of public guarantees in order to protect borrowers. This is coming to an end. There is something that should be done in order to avoid that NPL become a huge problem, a huge systemic problem again. And for instance, giving an award, even from a regulatory point of view, from a regulatory perspective, to those financial intermediaries who are more committed to greener corporations, or to corporations more responsible from an ESG methodology standpoint. This is something that should be part, in my opinion, of the new normal that we are all coming to envisage for the following years.
Thank you, Luca or Dr. Bellardini for being here with us. I want to thank Professor Kerr. I want to thank Professor Lemma and you as well, and thank you also for the great work you're doing with the Associazione Guido Carli, that is named after one of the, I would say, most enlightened chair of the Italian central bank before we entered the euro. Certainly, there's many changes happening in the banking system as well as in many other realms of our society, but certainly in the banking system, I agree with Professor Kerr that probably the topic is not the most exciting for the majority of people, but it's certainly a relevant topic because it has to do with our investment and it has to do with the value of the money that we put in our pockets. As you know, I always love to talk and to refer to Karl Popper, Professor Popper here, since we're all professor here, but Professor Popper, when he mentioned that science should be for all and should be written in a way that is accessible for all. So I think it's very important to have discussion that next to the parking charge are explaining and helping common citizens, helping everybody to understand the role of central banks and how the banking system works, and in a way also to take an active part in either regulating or new regulation or changes to the current regulation of the banking system. It's a very complicated topic, but it's a topic that can be accessible for all. And I have to say that Luca, now that you're here left alone, you're doing an excellent work and an excellent job in allowing people to understand. And I think it's a big challenge. Sometimes people turn against banks because they don't really understand how banks work, and also because it's poorly communicated to them by the same banking system. Sometimes in purpose, sometimes simply because banks don't understand how important it is to communicate not just the marketing aspects of their business, but also the dynamics of their business. So thank you.
I wholly agree.
Thank you. Thank you very much, Luca. My connectivity just gone away, but I'm back. So before we lose it again, I want to thank you again, and I want to thank the Austrian Economic Center for putting again this new stage in Rome of the Free Market Roadshow. We will be back soon with other events. We will come back in Rome, and as we promised, we will be back in Rome for real, physically, next year with other events. So thank you for Professor Lemma that has just left. Thank you to Professor Kerr that it was from London, and thank you to Luca from Milan. And I wish you a great evening and a very good night.
Thank you.